Welcome to the New York Business Leaders Podcast, presented by the Coyle Group. We interview the most interesting and influential business leaders in New York and hear their stories of success, challenges, and lessons learned while building their businesses and personal brands. New episodes drop weekly, so please be sure to subscribe to get updates in your favorite stream. Without further delay, here's your host of the New York Business Leaders Podcast, Gordon Coyle.
Welcome back to the New York Business Leaders Podcast. I'm your host, Gordon Coyle. In today's episode, Paul Gray, the CEO of Ironhold Capital, a New York-based hedge fund, joins me to speak about investing, capital raising, how hedge funds operate, who invests in them, and why, and much more. In addition to his duties at Ironhold, Paul has created a unique network of investors called the Iron 100. Here, high net worth investors, entrepreneurs, and executives can learn and share best practices around investing, research, hiring advisors, and more. Often they get together at great venues and settings in and around New York. Paul's also a frequent collaborator on LinkedIn, Forbes, Business Insider, Alpha Week, and several other publications. If you'd like to learn more about Ironhold or the Iron 100, you can visit ironholdcapital.com, click the contact button, and Paul or a member of his team will get back to you quickly. Finally, if you have an interesting story that you'd like to tell on this podcast, please reach out and contact me at gbcoyle@thecoylegroup.com. Thanks. Now, on to the show. Hey, everyone. Welcome back to the New York Business Leaders Podcast. I'm Gordon Coyle, and today I've got Paul Gray with me. Paul is one of the founding partners of Ironhold Capital. We're going to talk a little bit about his fund, fundraising, hedge funds, entrepreneurialism, all kinds of topics. But I'm going to ask Paul to introduce himself and give us kind of an overview of what you do. So, Paul, can you take it away for a few minutes?
Gordon, first of all, thank you so much for having me on the show. I became a big fan of yours ever since we had that first phone call. And for your viewers, just let these guys know, you took the time out of your day on a Friday night to provide value to my partner and I, which we'll never forget.
Thank
you.
I
was delighted when you invited me here.
Great. Glad you're here.
And as far as myself, we run the global value-based hedge fund called Ironhold Capital, which is based here in New York City. And we focus primarily on North America as well as in Asia. And we're value-based investors, much like Warren Buffett, Joel Greenblatt, Seth Klarman. And we've been in operation for about 3 years, and we've been growing rapidly ever since. And it's been a great experience. And one of my favorite things has been meeting very interesting folks like yourself. So very happy to be here again.
Glad to have you. So if anybody were to go on your website, Ironhold Capital, one of the things they'll see is the Iron 100 network, which really interested me. It seemed like something that we've seen in different variations around New York and around the world. Give us a sense of what Iron 100 is, and then we'll get into some other subjects as well.
Sure thing. So one of the things that I mostly handle in our firm is capital raising, as we were touching on earlier. And, capital raising in its simplest form is really a form of sales, right? So much like how you provide value to your clients, we try to do the same thing where we try to figure out what our target customer wants, and we try to give it back to them, right, as best as we can. And what I realized, having participated in a lot of masterminds and a lot of peer groups, was that there's a gap in the industry today, right? If you think about amazing groups out there like Tiger 21, YPO, Vistage, or Convene, there's a gap out there for folks between 10 million and 100 million, which is typically the clients that we target in our fund. So to provide value to them, we created a unique forum where not only can they share best ideas and practices with one another, but they also get full access to our hedge fund. Everything from our show, which we could discuss in a bit, early access to that and learn from the top investors on Wall Street, but they also get access to our research that we give away for free. So whether they want to do business with us or not, they could just take advantage of the research and pick those stocks, pick those companies for themselves, should they choose to want to. And we started this about 3 or 4 months ago. And Gordon, the response that we've gotten back has been tremendous. People have been telling me that I've been waiting for this for a very long time because, If you're a $10 million net worth person or perhaps higher, you don't have the same concerns that a regular H&I has, right? Somebody that's just starting out in their business. These guys are looking for new streams of revenue or looking to scale their business, or perhaps looking to pass on their wealth to the next generation, to their kids, and need a form of estate planning, need a form of wealth management. And one of the great things that we also do is we find and identify the best minds of the market, right? So if somebody has a question about insurance, I got the guy. I'm going to introduce you to Gordon. And I bring all the smartest people together and I provide that in one platform to our guests.
Interesting. It seems as though that at every different level of wealth in the market, there's a need. And it kind of seems like at the higher end, what you're talking about, it's not the ultra high, but it's kind of that high level person. They don't know where to turn for a lot of advice, service providers, what to do, how to do it. It's kind of an interesting thing. You think, oh, these people have it set, they've got the best advisors, but we all are seekers of some level. And I think you're filling a need with that, correct?
Exactly. Because like you just wisely pointed out, somebody that has a net worth of 20, 30 million doesn't have the same problems that somebody that has a net worth of 1 million. So if you're the CEO of that company, for instance, who do you turn to? It's very hard for you to turn to the people in your company, right? Because they're not necessarily on the same level. And not everybody has the same circle of friends or the same circle of competence where you could go to somebody and say, hey, listen, I'm trying to sell my business. I don't know if I should or not, right? That's a conversation you have to have with somebody that is either in the same shoes or somebody that has been there in the past. And that's what we're really trying to provide.
And I think the spirit of fraternity also comes into play for folks, regardless of the size of their wealth. If you put them all in the same room together or get them on the same call together, there's that spirit of camaraderie, well-being that kind of self-generates itself, which I think is very valuable.
Exactly. And, we learned this from starting the Capital Allocator Roundtable, which we did previously last year, or actually the year before that, when the world was normal, Gordon, if you can remember those days. We used to do it.
Yeah, I think I remember those days.
Exactly. And, from that roundtable, we have been gathering some of the greatest LPs in America today, some of the top family offices, some of the top fund of funds, pension funds, hedge fund, and private equity professionals. And I'm also very happy to share with your audience that you're going to be joining us on February 10th to be speaking to our viewers, which I'm totally excited for.
Me too.
And that's what really inspired the Iron 100.
Cool. So let's take a step back. And, for a lot of viewers, listeners, they've heard the phrase or the term hedge fund. Mm-hmm. As I've said, they've seen the show Billions. So they get an idea, okay, so this is a bunch of rich guys running around making everybody's life miserable. Mm-hmm. Can you give us, in succinct terms or basic terms, what is a hedge fund? What does it do? Why does it exist? And how does it fit into the kind of alternate asset community?
Sure. So in simplest terms, a hedge fund is a vehicle, an investment vehicle, if you will, that invests capital on behalf of accredited investors, whether they're high net worth individuals or more institutional like family offices, pension funds, or endowments. And, I'm not sure if you saw a recent article in Forbes or Fortune magazine recently, but we're proudly selected by the previous architect of Facebook to service his institutional investors on his capital allocation platform called SumZero. And today, Gordon, we're one of 125 hedge funds on that platform due to our unique strategy. So that's just a really quick example of the type of investors that we're servicing today.
So investors come to a fund, they pool their money together, you execute your particular strategy in that fund on behalf of the clients.
Yes, exactly.
And maybe ask the question, who can get their money into a hedge fund?
Well, you have to be an accredited investor, of course, and based on the Security Exchange Commission or the SEC, to be an accredited investor as a single individual, you need to have at least $200,000 in salary over the last 2 years, or have a minimum net worth of $1 million. And for couples, it's the $300,000 salary together.
So not just anybody can get into a fund like yours. And typically, what's the minimum threshold of dollar they have to put into a fund?
Sure, that's a great question. So it really depends on who the fund is. If you're thinking about some of the bigger guys like Bill Ackman and Pershing Square, right? It wouldn't really move the needle for them if they took a small check, say $1 million. But if you go to emerging managers, guys that are just starting out, guys that have been around for less than 5 years, normally they're more happy to take something on the smaller side, say $1 million, perhaps less, depending on what the terms are. But that's normally the range, I would say.
Okay. And if someone who is an accredited investor decided to put $1 million into a fund, how long would they expect to have to keep that money in the fund?
Sure. So again, it really depends on who the fund is and what their investment strategy is. But to give you an example, we utilize a value-based approach, much like Warren Buffett. It's very fundamental. And in order for our strategy to work, right, and to give you a little bit more hindsight, our strategy is primarily identifying a company or an asset that we believe is undervalued by the market and that we believe will go up in value over time. And one of our mentors is the famous value investor, Joel Greenblatt. And he famously says all the time that it typically takes anywhere between 2 and 4 years, depending if your hypothesis is correct or not. Could take more, but that's generally the time frame. So we try to lock up our investors for that amount of time. But if you go to quant hedge funds that are investing at the tick of a second, they might be a little bit more liquid. And depending on how big of a check you write, they might say, okay, Gordon, you can only stay for a year if you want to, depending on who they are.
Okay, good information. Earlier, we were talking about capital raising. Yes. So for many funds, whether it's Hedge or private equity or any other sort of venture fund, there's this constant need to continue to bring new money into the fund until it's closed, correct?
Correct.
How do you do that? How do you do fundraising? I think that's just an interesting conversation.
Sure. So I think it's kind of going back to what we were discussing earlier, that you want to identify who your target customer is, give them a differentiated product that they can't readily find in the market, provide it at a fair value. And then also you want to be able to you want to be able to generate the leads, nurture the leads, source them, and act like an advisor. Sort of how like you and I had that conversation that day. You didn't immediately go for the sale. As a matter of fact, for your viewers, what you told me was, Paul, you actually don't need this surgery, right? You need it at a later date. And that's kind of what you told me. You said, you don't need it today, but call me in 6 months, which I thought was incredibly huge because the brokers that we were speaking to before, Gordon, were like the madmen from the show. They all have like the cigars in their mouth. They're like, oh, you can buy today and this is what it's going to cost. But here's a guy who is an expert, who's recognized by the industry, telling us, you don't need it today, just come back tomorrow. So right away, you earn my trust. And that's kind of what we try to do here as well, if that makes sense.
Yep, got it. Interesting. Always be closing. Or the reverse. Depends on what the situation is.
Exactly.
So in a very fundamental sense, fund managers have to be very entrepreneurial. They have to wear many hats. They have to be experts at investing. Mm-hmm. But entrepreneurialism is a big piece of that because it's really about relationships. Can you talk to that a bit?
Absolutely. On our own show called Leaders in Business and Investing, we have the advantage of inviting some of the greatest hedge fund managers in the country. And one of the gentlemen that had the opportunity to speak with is Anthony Scaramucci of Scaramucci Capital. And he really says it best. He says, a hedge fund is really two businesses. You got the investing component, and then you have the business itself. Everything from marketing and business development, capital raising. And unfortunately, and I had this conversation also with the president of the Hedge Fund Association, Mitch Ackles, they say that most hedge funds really struggle because they forget that side. They slack off on finding the best vendors, the best auditors, administrators, accountants, insurance brokers. And then, capital raising is a full-time business. Going out there, generating the leads, establishing the relationships, continuously following up. It's not something that you could pick up 1 week and forget about it. It's continuous. So I think that's one of the advantages that we have here is that I'm focused on that component and my partner is focused on what he does best. And so far it has worked very well.
That's interesting. And I think that a lot of businesses, you could bifurcate between the admin, the professional service side of the business, and then the other side of the business would be sales, biz dev, marketing, relationship building, all in different degrees and varying degrees. But it's very true. In my business, if you're not developing business, you're kind of just slowly sinking. In your business, if you're not developing business or business relationships, you're slowly sinking. And in today's new world of digital, there's so many interesting opportunities, which we just talked about a little earlier, that I am really charged up about. And I think you are as well. I think that your Iron 100 network is a great idea. Your podcast is a great idea. What other ideas do you have around business development and relationship development that you might want to share with us?
Sure. So we are very technical in that aspect. So we look at everything from, how do you raise capital? How do you have these conversations? We deploy a couple strategies that we utilize from experts in the industry. So if you think about like Warren Buffett, for instance, he and Charlie Munger had an amazing salesperson named Chet Holmes. And I had his daughter on my show recently because she took over the organization. And we utilized all his approaches. He has a great book called The Ultimate Sales Machine. Highly recommend everybody read it. So everything that we do has been time tested and proven by all the greats. We try not to experiment on our own because that's really a waste of time, right? So we look at everything very specifically, like for instance, lead generation, copywriting. Writing on paper is far different from verbal sales. Whole different ballgame. It's very hard. So we pay a lot of attention to that. Content marketing, digital marketing, as you alluded to, everything from email, newsletters, the roundtable, the podcast. It's a lot. It takes a village.
I agree 100%. And it's funny. I read that Chet Holmes book many years ago. And one of the things that stuck with me was I think he used the analogy of walking into a football stadium that was full of fans. And he goes, every one of these people in this stadium could be your prospect, but only 2% of them have a need for what you're selling today.
Right.
The real problem, and that's what marketing is all about, is finding that 2%. Or finding some portion of that 2%. And that has stuck with me, obviously. And I think it was just a powerful message, a powerful analogy for anybody that's in business development. And quite frankly, there's not a lot of business owners or business leaders that aren't responsible in some way for business development.
Exactly. And see, that right there was huge for me personally, because I don't think most people would think about that otherwise. So like, for instance, with us, we have a very unique strategy. Most of our alpha comes from India. And, for us, we're not going to waste time on a family office that only dabbles in American equities or say real estate, right? Because it's not worth me spending 6 months or a year trying to convince them to invest in emerging markets. Because of reading that, I know who to target, my starving crowd, so to speak, and to find my 3% and then to sell them because they're already ready.
Right.
So that's kind of what I learned from that. So I was very happy you pointed it out.
It was just a powerful image that stuck with me for quite a while. I don't remember how long ago I read that book. It may have been 15 years ago.
Sure, whatever it is. And you know what's funny, Gordon? We go back all the time. We flick through the pages. Okay, what did he say in reference to copywriting? What did he say in reference to follow-up? Is it twice a week, once a week? And the reason, again, is because he was the best at it. So why try to reinvent the wheel? And why try to ask somebody that is not as privy as he was? So that's why
I never realized that he worked for Warren Buffett.
Charlie Munger, actually, excuse me, for the partner.
He worked for Charlie.
Correct. Back in the 80s when they were buying all the newspapers, sales were sluggish. So Charlie invited him over, and obviously he turned the whole industry on its head. He did very well.
That's amazing. So Paul, let's talk about investment strategy. Can you give us some insight into how your fund works and what you're focused on?
Absolutely. So kind of going back to what you were saying earlier about business, we realized that the greater hedge fund community is not as competitive as they were in the past, primarily because if you look at the market today, Gordon, you have over 15,000 investment firms here in the United States alone. And the reason why returns are kind of sluggish is not only because there's immense competition, but also because most of the funds here in America are all long short equity funds. So it makes it very hard to be swimming in a pond looking for fish when there's so many other fishermen, so to speak. So utilizing the advantages that my partner brings and the knowledge that he has in India, which to me is like thinking about China 20 or 30 years ago, before Wall Street really caught grasp of what was going on there, which is obviously not the case today. Like if you go to any trading desk, there's somebody there that speaks Mandarin, right? Such a huge market today.
Mm-hmm.
But India, uniquely enough, you have less than 500 hedge funds and mutual funds combined, right? And over 5,000 public securities. And generally, depending on the year you're speaking of, normally anywhere between 2 to 4% of the Indian population is invested in the stock market, meaning it's really premature. So there's immense opportunity, but the problem is how do you identify opportunity there if you don't understand the culture, the 100 different dialects, the laws and everything that's involved there. It's a really different market. And that's the advantage that my partner brings. So from a business standpoint, it's really easy for us to sit down with a family office and say, okay, here's how we differentiate yourself or ourselves. No, seriously, we're not like the other guys that told you, we're different. We actually are different. And here's why. And they absolutely love it.
And where do you make that point of differentiation? Where does that occur? Like, how do you communicate that and where does it occur?
Sure. So just like yourself, we don't really go straight for the sale. Like, for instance, when I was on the call with you, one of the things I noticed was you didn't say, I have the product, you should buy it. You nurtured me, you advised me, right? And we're the same way. So what we do was when we generate the lead, however we do, right? We kind of discussed that earlier. And then once we have the lead, we try to identify the pain points and then we act as advisors. So even if it's not in relation to equities, if it's in relation to real estate, I try to provide value. You're interested in Southeast? I have no experience there, but I know a guy. He owns one of the largest private equity firms there. He would be a great resource to you. More than happy to make the introduction. Your leg is broken. My uncle's an orthopedic surgeon. I'll refer you. I'm trying to just provide value any way I can.
Right.
Then I identify the pain points and I really hone in on those pain points. Why is it hurting you? How has it affected your business? How much money have you thought you lost? And then I dabble into it a little more. I say, okay, here's how it's going to affect you in the future, right? You continue to operate in this way. Inflation is only going to go up from here. Competition amongst equities is only going to go up from here. It's very hard to dabble in real estate or venture capital, right? Because it's so inflated and saturated. So there's very limited things you can do. So what I would suggest if you're interested in equities is to look abroad, as Joel Greenblatt says, in a road that's not as beaten. So you can look in places like Singapore, Vietnam, right? Cambodia. But the problem with avenues like that is they don't have democratic countries. Great thing about India is the largest democratic country by population size. So I steer them in that direction. I show them where the value is. Should they agree with me or not, when they're ready to make that decision, hopefully after providing so much service and value that they would come to me. And that's the real whole premise.
Interesting. And we spoke about earlier who accredited investors are. Who are predominantly the biggest investors in your fund or in hedge funds in general?
Well, for the big hedge funds, it's certainly institutional money, whether it's family offices, pension funds, endowments, fund of funds who really put together a multitude of investor money and then allocate it. And then for emerging managers as well, depending on who they are. For us specifically, it's our personal money and a very prevalent family here in New York. And from there, we're really hoping to leverage what we have with SumZero to get those larger check size. And not to give it away, but our target fund by the next 2 years is to have $100 million under management, which we think would really help us accelerate quickly. So that's why we work 7 days a week here, 24/7, because the thing is, Gordon, excuse me, see how excited I'm getting. The thing is that we're at such an amazing opportunity right now in the market that it's not even funny. where we are in the cycle is that we're on our peak. It's highly elongated due to all the stimulus that has been put into the market. And one of the things the famous value investor, Howard Marks, says so often is history doesn't repeat, but it sure does rhyme. And if you look over history, a decline eventually comes one way or another. My personal opinion, and this again is only my personal opinion, is I think this is going to be really bad. I think it's going to be worse than Great Recession. We could maybe get into that later on why that is. But I think it's so important because we're one of the few funds here in America that can provide the value that we do because of our strategy and because of the advantage that we have in that market, that now is the time to take advantage and get ready for that storm. You don't want to be doing it when it's here, right? Because there's just going to be too much going on. So that's kind of why we're pushing forward so fast as we are.
So market disruption, where we are today, which is early February 2022 in this conversation, all those factors will help motivate investors to start to see, okay, this is now my opportunity to go into a fund like yours because of the long horizon span that you've got and a strategy that uses the disruption to your advantage.
Exactly. And just to add to that very quickly, going back to the strategy itself. So what does value-based investing mean? I don't know if your viewers are privy to how that works.
I think it'd be great for you to explain that.
Sure. So what we're essentially looking to do is we're looking to find high quality businesses that we believe have excellent management teams, little to no leverage, right? Because we don't like debt. Like Warren Buffett says, one of the riskiest things you could do is to have debt on your books, especially a lot. So a lot of these growth companies that people are getting all excited about are carrying a lot of debt. So it's going to be interesting to see what happens when the tide pulls back. And then also, we're looking for businesses that we believe will grow into the future. I really can't speak about the portfolio because we are regulated by the SEC, but I can give an opinion. So like, for instance, one of the companies that we're really excited about is Alibaba. And Alibaba is a perfect representation of that. It's a company that is underpriced based on what we feel because of all the regulation that has been taking place in China, right? But whether China is going to continue in that way is a different story. Are they going to send Western money back? We're talking about trillions of dollars back to America. I don't think so. So that's why you see a lot of value investors like Charlie Munger, Manish Babrai, Guy Spear, all putting money into that company. And it's very exciting. So we hope to have an opinion on more companies like that.
And typically, you mentioned Alibaba, but are you looking at companies? What are the average size of companies that you're looking for in your portfolio?
Great question. So we're sector agnostic, so we don't focus on any one particular sector. And then we don't look at microcap. It's not liquid, so we try to stay away from that. So we're more in the mid to large, both in North America as well as in Asia.
And that's a big differentiator between hedge funds and venture capital funds, correct?
Correct. Venture capital firms are a little bit braver than we are. They like to take on more risk, hoping that there's going to be more reward. Nothing wrong with that, but that's not really our circle of competence. So we try to stay away from that.
And venture gets into the very nitty gritty of operational issues at the portfolio level that they're investing in, which is different than what you're doing.
Exactly. Yes.
Okay. So, and I think it's important just to kind of bring that up because the general public, I guess, just doesn't understand the different types of funds that exist and why they exist. And I find it fascinating that this kind of capital infrastructure kind of grew from nothing 30 years ago into what it is today, maybe a little bit further back. But, private equity's role is different than hedge fund role, is different than venture, and then different from angel and seed investors. And if it wasn't for this community of alternate asset investors and investments, we wouldn't have the available capital on the street to make startups, I think, and help grow small companies, mid-sized companies, and large companies grow into what they're doing today. Maybe you can comment a little bit further on that.
Absolutely. So the money has to come from somewhere, especially within venture capital world. So if you think of startups like Facebook, Airbnb, I mean, it's hard to call them startups today, but at one point they were. And in order for them to reach that height, somebody had to write that initial check. But as far as hedge funds go, it's rather interesting because the companies they invest in are very established. So one of our mentors, who I mentioned earlier, Joel Greenblatt, he says something interesting in his book. He says, and he also used to teach at Columbia University. And one of the things he makes the students promise is, you're probably going to make a lot of money doing this work, but you're probably going to add also little value to the society because you're already investing in established companies, right? And have you not invest, they'll get the money somewhere else. So he says, you got to give back. So my partner and I have kind of experienced this, not to his height, obviously, because he's managing $9 billion. But we try to give back as well. So my partner is very big on education, as I am. So he focuses on a lot of schooling in India. And some of the things out there, Gordon, is like a lot of work to be done. And he's putting a lot of resource behind that. And then I also volunteer here a lot as well. So that's kind of like my opinion.
Interesting. That's great. So Paul, as a startup hedge fund, I'm imagining a lot of businesses that we work with, including funds, they don't know where to turn when they're starting up. Who's the best accounting firm? Who's the best law firm? Who's the best insurance broker? You found me through an online search. So I've got to imagine that's a lot of how, like every business in a startup, kind of where they are, they go online. If they're not already surrounded by a network of advisors. So in the hedge fund world, is there, a go-to advisory place, or you have to start where you start? Like, do you have to go find all of your advisors?
That's such a great question. Here's what I would say about that. I think it's one of the most important jobs that a manager has. And unfortunately, most hedge funds don't really pay enough attention to that, because if you think about it, most hedge fund guys are finance people, right? So they're focused on only that aspect of the business. And then the other side really suffers operational wise. And, speaking with these institutional investors, they hate that. They want to make sure that you're only working with the best people, because those are the people that are also managing their money. If you think about it, the admins, the auditors, the accountants. So they want to make sure that you're working with established players. So for me personally, having the advantage of having our own show, just like yourself, we're able to meet some of the most influential managers. So like when I was speaking with Whitney Tilson, I would ask him, how would you speak with your custodian? What custodian would you look for? Or what legal counsel, what admin, auditor, who did you work with in the past? Any good referrals? And we do that up and down the chain. Insurance brokerage, I wasn't really privy to before then. I didn't even know we needed it. But my partner, fortunately, is very risk averse, and he brought it to my attention. And, for whatever reason, I was asking managers, and they didn't know, Gordon. So I was doing my own research saying, okay, I hope I don't make a mistake here. But when I came across your page, I saw the social proof, saw that you were an established player, recognized by the industry. I didn't have the opportunity to tell you, but I saw a couple of mutual connections we had on LinkedIn. And I asked them, what do you think about this guy? Straight shooter, great guy, make sure you call him. That was the response. And that's how we had that conversation.
Interesting. So there's no set ecosystem for a guy or a group of folks starting up a hedge fund.
Here's the thing. You could go and try to reinvent the wheel yourself, so to speak, and try to go out there and have all these different conversations. But if you really want to scale quickly and you want to just find the best people right away, speak to people that already did it.
Yep.
Like for Ironhold, I'm going to pick their brain all day. I'm going to ask them, when you had this particular issue, what did you do? How did you scale your company to get to this height? Because I don't want to learn it by myself. I don't have the time to be the best investor, the best lawyer, the best insurance broker.
Right.
My job is to identify those people, put them in the right seats, and incentivize them properly so that they're excited to get to work every day and do the best job possible. I really think that's the best way.
Mm-hmm. Interesting. It just dawned on me, you had mentioned Iron 100 again. I want to go back to that.
Sure.
If anybody's watching this or listening to this and they're like, I love that concept. I can't get into Tiger 21. I'd like to learn more about this. How do they do that?
Well, visit our website called theiron100.com and reach out to us through there, and a member of our team will reach back out to you. If not myself, perhaps my partner or someone else. We will love to speak with you and learn a little bit more about what you're doing. And Gordon, I'll be sending you an invitation as well, because I think you would provide immense value to our members. And I think they would be very excited to learn from you.
That'd be great. Yeah, looking at some of the events you've got coming up and some of the things you've already done, it seems very interesting. So I would appreciate that. That's great. So Paul, we're kind of running out of time. I want to be respectful of our time. Are there any final points we didn't get a chance to go over today that you'd like to talk about?
Well, here's what I would say. I would say whether people are available to invest in a hedge fund or not, depending on where they are in their respective careers, I would say this. I think we're at an interesting cusp of history, considering where we are with the stock market priced at an all-time high, although there has been some recent declines. And I would just be mindful of what's going on with inflation, oil, potential war in Russia and Ukraine, the geopolitical problems that we have here in America, the limited investment opportunities in a saturated market, whether you're speaking about real estate or venture capital. And I would challenge you to really look at your portfolio and say, what is best for me? And then reach out to the people that you think have the best prowess to kind of help guide you. And the reason why I say this is because I don't want something tragic to happen and people are left exposed. I think it's really important for them to be aware of the situation now before it's too late. And I hate to be all doom and gloom, but considering where we are today, I think it's very important.
I think that's great advice, and it's well taken. So, Paul, thanks for being on the show. Really appreciate the info you've shared with our viewers and our listeners. If anybody would like to get in touch with you, how's the best way to do that?
Wonderful. If you go to our website, ironholdcapital.com, reach out to us that way. And we're normally very quick. We usually get back to you within a business day or two.
Okay. Fantastic. I'll put that in the show notes and in the description box on YouTube. So if you missed the whole URL, we'll put that in there. Paul, great conversation. Appreciate it. Hope you have a great weekend. And I'm Gordon Coyle for the New York Business Leaders Podcast. If you have an interesting story that you'd like to tell on this platform, give me a call, drop me an email. My email address will also be in the show notes, and let's chat. Until next time, stay well.
That's it for this week's episode of the New York Business Leaders Podcast. Be sure to subscribe so you don't miss next week's episode. In the meantime, find more interviews and resources at nybusinessleaders.com.